Welcome to Markets Now. I'm Michelle Rook with Scott Varilek, Kooima Kooima Varilek. Mixed trading, both grain and livestock futures. The cattle futures started off just a little better, now are drifting into the red, and we have hogs a little bit higher. So let's start there, Scott. Cattle, boy, the psychology has certainly changed in this market. Every day this week, we get these higher openings, and then it seems like liquidation happens.
Yeah, and thanks for having me. But it's unable to hold those little rallies for sure, and it's I like how you worded all of that. It's been a struggle on this break and coming off of record high prices and trying to decide if we've broken enough or if we have to break more. Is a big question, but we just don't seem to have the funds or the buying behind this market to try to turn it for good here yet. You get your flashes, you get a nice up after a cattle on feed report, and unable to hold that and finish lower on the day. So the report was friendly to the estimates, and I think that helps, maybe put in a little bottom here and try to recover some, but it just didn't look like the numbers were just screaming bullish that, okay, the funds want to just get back in. We got to get in and buy this market yet. It's still too much uncertainty there yet. And there's still these bigger placements numbers that we're trying to digest to a year over year. You've got cattle coming in from whether it's Mexico or Canada or selling them early, adding to these big placements. That's going to hurt us here in the short term, but I think long term, we still have to look at this big picture yet. Are we really building this cow herd yet or not? I mean, that's what's going to be where this market's going to hold, is on that fundamental nugget right there. Are these heifers going into the feed yard or not? If they're going to the feed yard, which to me looks like we still are, and we're still going to have this small cow herd problem, that's what's going to bail it out in the long run picture here. But for the short term, it's been a little tough sledding.
Right. So we're back, or we have been testing the lows that we hit on November 10th. Are they going to hold?
We've got some different lows that we have to watch here. We've got the November 10 lows, which were, just $1.50 to $2 away from some of those prices here. And then you've got some long-term support, the 171.97 would be the 2014 high. If we come down to that for a front month, if we take that out, it's a little negative. And then our third spot we got to watch is that 165 long-term uptrend. That's going to be a strong support number. And, for cattle producers, we're going to want that to hold, in my opinion. So 3 different numbers we got to watch. Will it hold? It hasn't felt like we've had a lot of strength behind us, but the more time we can put behind this last break, if we can even hold some steady sideways, turn the calendar into December, maybe we can start to feel a little bit better. So we don't the intraday big moves up and down. If we can kind of settle that down a little bit, the more confident I'm going to get that we can hold some of these lows.
Cash trade has been light and kind of sloppy this week.
Yeah, it seems pretty quiet. I don't think the Packers being very aggressive. There was some 176 printed yesterday, and that's kind of disappointing when we were kind of hearing 178's possible. Maybe some, getting around that 280 to 276 to 280 meat kind of trade bids. But it's pretty quiet. I'm not hearing a lot of action, and Packers not out and about. Looks like they got enough cattle bought last week, some lower prices, and still can pull from some contracts seasonally. That's what they do this time of year, and that quiet cash news makes me a little nervous that we can fight this market just a little bit. You're going to put some extra pounds on your cattle. You're going to start passing. You miss the highs. Maybe you're starting to fight the market just a little bit. And we've got, some cheaper feed costs and some excellent growing weather. So going to have to watch these carcass weights to see if that's going to get away from us. We can be our own worst enemy in some of these markets when we start to fighting a downtrend, and we have those lining up. You're looking at your replacement on your feeders and saying, well, I'll just maybe feed what I have. I've got the feed. I got some cheaper feed. So not liking that. That's the one damper that we really could have on this market is if we just make these cattle too big.
Yeah. So when does the cash in the market seasonally start to turn? End of the year? When?
we're usually looking at, we get about a week or a week and a half into December, and we can turn this cash market a little bit. And I'm hoping if the bear gets Thanksgiving, that the bull can get Christmas, and that's how your seasonals are going to line up. Usually we can have a little strength through the end of the year and the end of December. You usually can get that little uptick here or there for the last couple of weeks in December. So that's why I think if we can get to the middle of December and hold some of these lows, some of those support lines we talked about, that we can end the year on a strong note and feel pretty good about that.
No coincidence. I mentioned cattle lower and hogs higher. Some more cattle hog spread action going on there, it looks like, huh?
Yeah, no coincidence is right. And some of these markets have correlated with each other, and it's been a little bit evident. There's the crude oil lower and the hogs cattle go lower, cattle and crude oil moving together, and then you've got hogs and cattle trading the opposite. There's apparently some cattle hog spreads that's pretty evident. You've got a hog market that's got probably, in my opinion, some negative fundamentals up front. We've got the lower cash and product, and I just think we've got enough numbers around that big supply that we've been harping about for long enough. I'm ready to turn the calendar and get into some new news, but I just know that we have a lot of hogs to get through here yet. So we have that negative news. We have the big break yesterday. And then once the cattle start trading lower today, the hogs can turn around and be higher. So still some correlation there between those two markets.
Yeah, cash and cutout certainly look like fundamentally this market is due for a correction for sure. Okay, let's move over to the grains. As I mentioned, they're mixed as well. Soybeans taking a setback, corn and wheat have been higher. So soybeans just seeing a little profit taking. It looked like we kind of ran up into some chart resistance yesterday.
Yep, just had a nice run there, got up into the $14 range, and yes, hit some resistance. And with this holiday trade, the thinner trade, I think it's easy for that to say, okay, maybe a little bit of profit taking here, relaxing from the upward trend that it's on. And that's coupled with also some maybe slightly negative weather news in Brazil. We still have this weather market in full swing, and you've got some lower temperatures and trying to measure how much rain they're getting, trying to get those amounts figured out. So it's easy to maybe take a little profit here for the rest of the week. And I don't look for that story to be done. I think this weather story is going to hang on. It was dry long enough that this one rain is not just going to fix everything, and we're all good to go now. So I think Sunday night's going to have some fireworks happening, and we're going to be looking at some forecasts. And if they come out drier again, we're going to be back to the races and moving higher again.
Yeah, I would agree with you on that. Corn going the opposite direction of soybeans this morning. So is corn following wheat, or are we getting a little help from this export business this morning? We got 5 million bushels to unknown.
Yeah, the wheat quit going down. That doesn't hurt. And yeah, you find a little demand on the corn. That's good for it, but it's still stuck in this small range. So, a 3 cent higher move, you almost just write it off and ignore it. It's not really going anywhere. If you're long, you get ahead by 4 cents. That's about all you can make. If you're short, you get ahead by 4 cents. That's all you can make. It's been pretty tight as far as a trade. But I look at the corn market and say, okay, we've got plenty of supply around. Is how I'm going to look at it. So it's the price, though, to me looks like if you're an end user, you're okay with this price and it looks a little bit appealing. You're willing to buy it. It's been a long time since we've been at these levels. So end users are willing to buy some of this corn at these prices, and where it needs to, then the basis can show up. I mean, where there is too much supply and weaker demand, yet you have some threes in front of your cash corn numbers where there's some piles of corn that you hear about. So it's going to show up a little bit in basis here if it does need to get weaker, but still holding the sideways range till further news. Let's just keep these end users chewing through some of this corn, and that's going to help us out the further we can get down the road there.
Scott, are you suggesting that end users, guys with cattle hogs, that they buy hand to mouth here on corn or not?
I stuck my neck out there on a little bit further than just hand to mouth.
Okay.
We've been hand to mouth on the way down, and that's worked fine because you didn't want to get stuck with too much product at a high price. And now I'm looking at this saying, okay, from what I've been paying for corn for the last couple of years for feed, I'm very interested in this price, and I'd like to just kind of put that to bed and grab some of that corn for the future here for a while. So I'm okay with grabbing a nice chunk here for some end users.
Okay, yeah, we definitely haven't seen these prices for a while. All right, thanks for joining us. Have a great Thanksgiving. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.